Cipher Mining, ticker symbol CIFR, closed trading on Friday, the 21st of November, at $14.15, representing a decrease of 41 cents, or about 2.8%. This close followed a week in which the company announced a new 10-year high-performance computing and artificial intelligence hosting agreement with Fluidstack. Under that agreement, Cipher Mining will provide approximately 39 megawatts of critical IT load capacity, supported by up to 56 megawatts of gross capacity at its Barber Lake facility in Texas. The initial value of the agreement is approximately $830 million, with extension options that could increase the value toward $2 billion over time. The company also maintains an existing long-term agreement with Amazon Web Services that was announced earlier in the month. That agreement covers a 15-year lease arrangement valued at $5.5 billion and involves high-density AI compute hosting. In addition to these agreements, Google has expanded its financial support related to Fluidstack's obligations, increasing its total backstop commitments to more than $1 billion. During the week, Cipher Mining's stock price experienced significant volatility. Earlier trading sessions showed gains following the announcement of the Fluidstack agreement, but the stock later drifted downward despite the broader market generally closing in positive territory on Friday. The stock price movement occurred in the context of recent declines across AI-related and high-beta technology stocks during the prior week. Earlier losses followed a period of heavy selling driven by market concerns about interest rates, inflation, and macroeconomic uncertainty. Prior to these declines, Cipher Mining stock had reached new all-time highs after the AWS agreement was announced. The company is currently undergoing an operational transition from primarily Bitcoin mining toward high-density AI hosting and long-term infrastructure service agreements. At the same time, Cipher Mining has ongoing capital expenditure requirements associated with the development of multiple data center sites, including the Barber Lake and Colchis projects. The company has recently issued $1.4 billion in senior secured notes to support these construction and expansion efforts. Revenue from certain agreements, including the AWS contract, is scheduled to begin at later dates once construction milestones are reached and operational capacity becomes available. The Fluidstack agreement similarly depends on the delivery of new infrastructure and expanded power availability at the Barber Lake site. The company's financial results in the near term continue to reflect the capital-intensive nature of large-scale data center development. Construction timelines, financing requirements, and operational ramp-up periods contribute to variability in the company's financial statements. The stock price has moved in response to announcements of new agreements, changes in market sentiment, fluctuations in broader technology indices, and evolving expectations regarding delivery schedules and future revenue. Cipher Mining shares have previously demonstrated sensitivity to both positive and negative developments in the broader AI infrastructure and cryptocurrency sectors. The company's legacy operations remain tied to Bitcoin mining, though the company's strategy has increasingly focused on long-term partnerships with hyperscale clients and AI infrastructure providers. The market has reflected this strategic shift at various points throughout the year, including strong price appreciation following the AWS announcement and subsequent declines during periods of macroeconomic weakness or market uncertainty. In the trading sessions earlier in the week, Cipher Mining stock rose after the announcement of the new hosting agreement. The rise followed positive earnings reported by NVIDIA, which contributed to renewed optimism in AI-related stocks and the company's supporting high-density compute expansion. NVIDIA's results indicated strong demand for AI compute hardware and infrastructure, which has implications for companies involved in data center build-outs and power-intensive hosting solutions. Cipher Mining's operations in Texas provide access to power resources and land suitable for large-scale deployments, and the company has begun positioning itself within this segment through long-term agreements. Despite the company securing new contracts, the stock closed Friday lower. Market reactions to contract announcements and infrastructure news can vary based on the perceived timeline until contract revenue begins, expected capital requirements, and external macroeconomic conditions. Broader market performance on Friday did not align with the company's stock performance, as major indices closed the week higher. The stock's movement suggests that short-term price fluctuations continue to reflect changes in investor positioning, risk sentiment, and near-term financial expectations. Cipher Mining remains engaged in long-term development projects that require sustained investment and extended construction periods. The anticipated revenue from major agreements is tied to future operational milestones rather than immediate cash flow. Construction of the Barber Lake and Colchis facilities, expansion of power capacity, and continued negotiations with hyperscale clients form part of the company's ongoing strategy. Updates regarding construction progress, financing developments, and regulatory or energy-related considerations influence investor expectations. The stock price will continue to respond to such information, along with broader conditions affecting high-growth technology and infrastructure companies. As of the end of the week, Cipher Mining has multiple long-term agreements in place. The AWS contract outlines 15 years of revenue tied to high-density compute leasing. The Fluidstack agreement outlines 10 years of hosting services with potential extensions. Google's financial support on associated obligations demonstrates external interest in the broader hosting partnership. These agreements collectively represent significant long-term commitments for both infrastructure deployment and operational performance. The associated capital expenditures and financing decisions will remain central factors in future financial results. The broader environment for AI compute infrastructure continues to expand, driven by demand for training and inference workloads requiring significant power and cooling capacity. Companies positioned to provide these capabilities have increased their development efforts and land acquisitions. Cipher Mining's transition reflects industry trends towards specialized hosting and long-term service agreements. While the company maintains Bitcoin mining capabilities, the focus within recent announcements has shifted toward meeting the needs of AI clients with high-density compute requirements. Volatility in the stock during the week reflects the combination of long-term strategic shifts, significant capital expenditure, and changing investor expectations. As of Friday's close, the stock remained below levels reached earlier in the month. The company continues to develop its infrastructure projects, expand its partnerships, and prepare for future deployment phases associated with its agreements. The stock's performance over the coming weeks will depend on factors including broader market conditions, updates on construction milestones, financing developments, energy considerations, and future partnership announcements. Cipher Mining's stock conclusion for the week at $14.15 captures the intersection of recent major announcements, ongoing development activities, and market-wide sentiment. The company's agreements with AWS and Fluidstack, combined with support from Google and its ongoing build-out of high-capacity sites in Texas, represent substantial operational commitments that will influence future financial periods. The variation in day-to-day stock price movements throughout the week reflects the current stage of the company's development cycle and the timing of revenue associated with long-term hosting agreements. The company remains positioned within the broader AI infrastructure landscape, with future performance tied to execution across multiple operational and financial dimensions.